Good evening, I'm Giuseppe Basile, I'm the Trading. You can find at the website www.fibstalker.com. I also post regularly on Twitter using the @fibstalker nickname. Good evening, today is Tuesday, March 11, 2014, and it's 15 to 11 p.m. time in Toronto, and this is a daily update for three of the Japanese yen forex pair I follow: the US dollar versus Japanese yen, the euro versus Japanese yen, and the pound versus Japanese yen. This video is a video review valid for tomorrow, March the 12th, 2014. I will start from the US dollar versus Japanese yen. What you see on the screen is the daily chart of this market, and those who follow me know that there is I identified an area of support starting at 101.50 here, which held back at the beginning of February. In fact, the level 161 held, and actually this level, the 101.53, where we would look for participation of program trading, actually kept working as a very good support area mid of February as well as at the beginning of March here, and this support area pushed price higher for this in this forex market pair. Now, recently we had this move higher, and there was an interesting development because the all the way halfway back for this market failed, which means that, as we can see here, this is a confirmation of longs. And there is a possibility also that today we saw the lows for this market, and let me elaborate a little bit about this. First of all, congratulations to those who follow my advice, and yesterday there was a short here, a short after the sequence of measure move higher in the 4 hours failed, and we had participation at this starting at this 103.34 with a stop above 103. 44, 46 here, and we saw price moving into the first target, so I will consider this level traded here. Now the market is actually correcting towards the next level of resistance. This in the sequence short on the 20-40 minutes is represented by the level 103.10 with a stop above 103.18, so this would be an 8 pip stop here. However, this trade is a risky trade now, for the reason that I'll show you. All the Japanese yen pairs actually are reacting from a level of potential support here, and the level that that program trading is using in the US dollar versus Japanese yen is represented by these highs, two highs. This could only be identified after the fact, so I'm not going to claim that I identified this level 102.84 before the fact. But actually, as soon as we touched the first target of the measure move I showed you before, then we got this reaction, and now this 103.10 is under pressure at the moment. So I would not trade this this level here. If you're in a trade and you're still in a trade, you didn't take profit at the first target, just try to ride this trade lower and take it out above 103.18. The reason why I believe that we found support is because as we move now to the other markets, the euro versus Japanese and the pound versus Japanese yen, I'll show you that there is a similar pattern going on. So for what concerns trading of the short of USD, of the US dollar versus Japanese yen, you can just skip the short, and congratulations if you took the short, and see what happens at this 103.10, and you will keep the trade until we move above 103.18. Remember that the target for this trade remains anyway the highs to lows, and that's 102.50 level here. So moving to the euro dollar versus Japanese yen, you will remember that this market on the other side had support at the beginning of February. This is an extension long. If you want to review how I chose this extension long, just subscribe to the newsletter and review the weekly newsletter I sent usually on Sundays. But as you can see, after we saw this support at 136.60, price traded into 141, and we saw resistance there. After that, however, trader came into came and participated on the upside at this all the way halfway back at 138.70, 138.80 here, which pushed price higher in the direction of the pass of least resistance, which is which is long at the moment because of this sequence of weekly support, and the last support level in the sequence is this 136.60. So price continued higher, as you can see here, and broke this 142.08 level. This is a confirmation of support as well as a confirmation of the targets above. And at the moment, we also have to consider that this market might be might stop just here, and this might actually be it for this correction, and the market might be trading this 142.23, which actually has first target right at that second target of this measured move. So things line up quite nicely here. So this means that at the moment we might be already in a trade here, and the confirmation will be given. So the area of support, which can be seen here on the 4-hour minus chart, sorry, for our 4-hour time frame here, it's represented by this highs to high, and the confirmation, as you know, comes always after the break of the sequence, the opposing sequence. So we have a 142.52 entry level here, and actually, as you can see, the entry came at after hours here with a stop below 142.22. So let's see if this market is going to provide us with another opportunity to enter long. The current sequence of measured move short is this one. So we had at 143.30 we have participation on the short side, and price was price went into this 142.59 level, and now the confirmation of this area of support starting at 142.52 will come when the market will actually break on the upside this 142.95.96. So if we break that level, that would be an indication to that the longs now is in play. So a possible trade would be long here would be to buy 142.96 with a stop below lows. It's also possible that this market is going to provide a better entry, but we cannot count on that, and that better entry would be tracing from lows to highs and waiting for the market to come back to the entry level. So if we go above 142.96, and let's say that the high is going to be 143.04, which is from lows to highs, and then we wait price to retrace into the corresponding 50% level here, and this would be 142.71 if that was the high, but I don't know what the high is going to be here of this move. So this is something that needs to be monitored tomorrow as we follow the markets. And this is exactly the same trace, so the confirmation of support will come once we we actually once we actually fail on the upside, the next the 61.8% of the next measured move, and that's an application of the fib stalking technique here. So we need to see price above this 142.95.96. Similar situation for the pound versus the Japanese yen here, and for this market, support was not provided by a 50% retracement, but it was provided by an extension long. And again, as always say, this could only be identified after the fact, not before the fact. And price, once we identified this level of support, 169, and the reason why it was an extension is because we saw this extended move here. So we knew that somehow this price was actually being pulled out by program trading, and the next measure move would have been an extension. The first target of this measure move that found support at 169 rather, sorry, and the first target was 173.25. We saw price getting there, and you will remember that in the last 2 days I provided another level of support for this market. This was the lows to high. So as you can see, it looks like that all the Japanese yen majors are actually finding support at different levels. For the pound versus the for the pound versus the Japanese yen, this level comes from lows to highs, and it's the 71.20. So in this market, there is a sequence of measured move that we can actually show also on the 4 hours, but I'll be more precise. I'll show you the sequence on the 15 minutes, and as we can see, lows to lows, we have participation at 172 on the short side. The 172.13 was never breached. Price went to the first and second target, and when we trace from lows to lows, we see that we had a failure of this sequence just on top, because price went above this 171.23, just on top of this area of support. So this is for me enough confirmation already. So actually we should enter this market as soon as possible, putting a stop below current lows. And actually let me show you again the sequence of measured move here, and we actually can trace this sequence in a number of different ways, but basically all these traces then end up with the same actually with the same outcome. So we have this sequence of measure move here, or we can actually reuse the highs to lows here, and use this lows to lows here. And as you can see, we had this measure move bringing price into first target, and then again same anchor, new lows. We actually had another trade short here, participation is 171.90, which brought price into first, and we can consider this second target as well, 70.74, and the actual target towards 70.64. So we can consider this actually hit, and and then the next measure move, as we can see here, it broke. So to enter this market, we should consider the where the market turns here, then we trace from lows to highs, and we're going to enter that market at the 50% level with a stop below below lows here, as usual. I hope this update. It's useful. I wish you a very good evening and a great trading day tomorrow. Bye bye now.